The world doesn't need another note-taking app. What we need are world-changing, ambitious business ideas. We need people who are going after deep, new technologies that will fundamentally change the way that like the world works. Where's the new internet? Like that's what we need. We need that kind of stuff. We don't need another note-taking app.
Welcome to Money Moves, the show about raising money, making great investments, and building venture scale businesses. I'm Neil Devani, your host and the founder of Necessary Ventures, a firm investing in what the world needs. Each week, we'll talk to folks who have raised anywhere from $10 million up to billions of dollars. We'll learn how they return multiples of 10x to 100x or more to their investors. We dive into their stories, uncovering what worked and what didn't, learning from real experiences to understand the journeys of raising capital and rapidly scaling a business. Money Moves isn't just for those already in the game. It's also for anyone interested in the mechanics of startups and venture capital. Whether you want to raise money, make better investments, or just understand how it all works, Money Moves gives you the insights and advice you need to succeed. So join us each week and hear from those who've been through it all and learn from their journeys. All right. Hey, Charles, thanks for joining us.
Hey, Neil, how you doing?
So I want to just tell everyone who's tuning in, before we started this, I always ask guests if there's anything they want to just make sure that we stay away from or avoid as a topic, anything they're not comfortable talking about. Charles had a great answer. Charles, I'm going to ask you to say it again, if you don't mind.
Well, have you ever met me before, Neil?
Yeah.
Yeah, there's nothing off limits.
Yeah, I've not known you to ever be shy about discussing any topic or to be uninformed on any topic. I feel like you've got a lot of knowledge in that noggin. Hopefully we'll get a lot of that out today. The first thing I wanted to ask about was the recent announcement. You just switched over from CEO to CSO. Can you tell us a little bit about that?
Sure. I mean, what do you want to know?
What led to the transition? What was the thinking there?
Long time, actually, in the works. So, I think that when I had told the employees that I was planning to make this move, which by the way was like 6 months ago, somebody asked, for how long have you been thinking about doing this? And I said, for 7 years, I've been thinking about doing this. My training, right, is I'm a scientist. I'm a physicist. I'm on vacation right now, technically. This is what I'm doing on my vacation. It's like I have a blackboard of equations and being a CEO, I think was necessary at the time in terms of going to that 0 to 1 phase. Somebody had to do it, and I think I was the only person who was really able to do it at that moment. But my love has always been doing science. And so once I was able to get the company through that 0 to 1 phase, I was looking to hand it off to somebody else to take it to that next stage, and I could get back to doing research.
Did you try at the very, very beginning? I want to go back to that time when you started the company to find someone else to be the CEO so you didn't have to do it, or did you just kind of say, I got to be the one to birth this company?
No, we tried to find somebody else to be CEO, and I wanted to be CTO. But just it didn't work out.
Can you just take us back to where you were when you decided to start the company before we even thought about trying to find a CEO? What was the origin of the idea and the conviction to say, I'm going to start this company?
There's lots and lots of things wrapped up in that, right? So one thing was that I was tired of working at other people's companies. That's also really, I was like, I'm really tired of working at other people's.
Common feeling.
At other people's companies. And so at the time, right, this is 2017, and machine learning at the time was almost entirely just sort of supervised learning, people building classifiers, right? So almost all the machine learning at the time was around classifiers. And almost all of the actual work was being done in images. So you think about, 2017, pre-transformer paper, everything is an image-based classifier. Convolutional neural network image classifier. And it just seemed like there was a universe problems that we could attack with different types of machine learning that just was way outside of that. The original kind of idea was that we thought that generative models, generative AI would be the future of kind of machine learning, future of artificial intelligence research. And I didn't think that working on images was particularly interesting. So the question that we kind of had at the initial formation of the company was, could we use generative models to solve scientific problems? So coming from a physics background, I did a lot of things where we would build like molecular simulations of something like protein, for example. You would have each atom and you describe how the atoms interact with each other, and you'd use the laws of physics to simulate the system. And those things are bad. They don't work very well. And so the question was, instead of trying to build up these piece by piece simulations of really complex systems, could you learn them with generative models? That was the original idea behind the company. So it didn't have anything to do necessarily with medicine or biology or anything like that. At the initial, like, that's why it's called Unlearn. It's not called like bio simulation company, because that's not what it was. It was more of a like AI research company that was focused around how we could create generative models that could solve scientific problems. And the biology kind of focus, but that was part of like, if you put like a big umbrella on what we were doing, biology was part of it. But that focus actually into certain problems within the medical domain came a little bit later, like 6 months ish later.
Were you thinking that it was going to be more of like a research lab than a venture backed startup, or were you thinking, let's raise venture and we'll figure out a business model over time?
Yeah, I mean, we incorporated the company to take capital effectively. Like, we had term sheets when we were incorporating the company. I mean, it was formed as a venture-backed company, but we definitely did not know what its business model or anything like that was going to be. It was sort of kind of at the initial stages more like a DeepMind or OpenAI style company than like, focused on a particular problem, like building a solution company.
Did you feel any degree of like risk or concern in taking that path, given that you'd come from postgraduate education and had worked in a large corporate setting? Obviously, not a fan of that, but those are more stable environments than a venture-backed startup. Was there any sort of fear or anxiety about the risk involved?
Not for me, no. Uh, but I think for my co-founders, probably for John and Aaron, there was, but for me there wasn't. I'm lucky that I have a supportive wife who is a lawyer, and her job is able to pay the bills without me having to worry about that. so, no, I mean, I really wasn't worried about it at all. I think it's interesting, there's this view that some people will say that entrepreneurs should go all in. They should have this no backstop or whatever. Like, oh, if your company fails, you're going to be homeless, and like people like that because you're going to fight like hell. But the reality is that almost, if you look at most of the successful entrepreneurs and people who you think about, almost all of them either come from money, or it's like their second startup or something like that really makes it big. Their first one is like a small exit, and the second one is the big one. In real innovation, okay, real innovation to take that big shot to build something big, you can't be afraid that you're gonna end up homeless on the street if your company fails. If that's where you're at, you're building some like little company that's just trying to you're building something low risk, right? You're not building SpaceX. If you're Elon and you're worried that if your company goes out of business, you're done, you're not building SpaceX.
Yeah, I think there's a lot of truth to that. I think there's a lot of founders who don't have a safety net, and then it's hard for them to play big, to take risk. And there's also, I mean, from the venture investor mindset, right? Like a higher propensity to sell to the first buyer that comes along and makes an offer. If that's going to make you $5-10 million, that's life changing, which is fantastic, right? But for those entrepreneurs, but for investors, they're looking for a much bigger outcome.
Yeah. So I think that being lucky in this case, that I don't have to pay the bills. It helps me take big risks.
Yeah, advice number one: marry a corporate lawyer. What was the moment where you guys went from like a generalized research company into the specific application that you're doing?
Probably about 6 months, maybe even a year after we had founded the company. So the initial 6 months to 1 year, we weren't exactly sure what we were going to do. And one, we didn't know what, like, there's a business model, I think, came years later. We're still like, because Unlearn is a deep tech company. There was a lot of deep R&D involved. The the initial question really was like, what will this technology even work for? We were working on specific types of generative models. We took couple of different, I had come from Pfizer, so I had connections there. So we were able to do a couple of different research collaborations with Pfizer in different areas in that first year. So one of them was focused around genomics, and one of them was focused around sort of clinical data. And what we were interested in, and we ended up publishing a paper with Pfizer in the genomic stuff, but not on the stuff we were interested in. We published a paper on the stuff Pfizer was interested in. What we were interested in was whether or not you could learn from looking at sort of genomic data, could you learn to simulate the effects of, say, gene knockdowns? So, like, hey, we're going to knock this gene down, this expression, what's that going to do to the expression of the rest of the genes? And then could you use that to maybe do target selection or stuff like that for identifying drugs? Didn't work. Just didn't work at all. So we abandoned that one. And then the other one where we were looking at, could we create these, what we now call digital twins of patients, which was, could we take data from a patient, clinical data, the kind of data you get either at a doctor or in a clinical trial. So you get these measurements over time, try to forecast and simulate that person's disease progression. We found that worked really well. And in addition, I think it really was more of a technological reason as to why we ended up going down the clinical pathway at the time, is that the technology seemed to work for it. I'm really glad that is the direction it went, because that's a business. Like clinical trials, there is a business model that you can work from, whereas target identification, that's not really a business. That's much more difficult to figure out how to make money from.
Yeah, we have that. We have a internal document of like tar pits or antitheses, things that are attractive on paper when you think about them the first time, but through experience or like going in more detail, you realize it's a really really hard business model. And target generation is one of those. We're not equipped as a firm to invest in those. Even if we were, it doesn't seem like a great place to be.
I mean, I think that it's a great place to be, actually. But I think that you're raising $1 billion for your company. Okay. I think you got to raise $1 billion. And I think that you need to select like 3 different targets. Then you got to find the drugs for it. And you are building a next generation pharma company. But I don't think that it's not like, it's definitely not a first time entrepreneur style company. Like you're raising $1 billion, you're going big on it. Yeah.
Yeah. Just a small raise to get started.
Yeah.
Uh, as you have gone through the process now, you've raised several rounds. What has been the easiest round that you've raised of all of them?
Our Series B was probably the easiest round that we raised, which would have been in 2022.
Mm-hmm.
Yeah, Q1 2022. That was fast. I mean, we raised that in like 2 weeks.
What do you think made it fast? Was it like the macro condition, or was there something else that sped it up?
I think that there were two or three kind of things that you could think of as what made that really fast. One of them, so actually just published this little post maybe like a couple weeks ago about steps to raise money or tips for raising money. I actually realized after I published it that I forgot the most important tip, which is that you should raise around some sort of external milestone. I think that was like the most important tip, is like even the reason you're raising is you have some sort of milestone inflection point that you hit. And in March of 2022, we got a draft qualification opinion from the European Medicines Agency, or maybe it was the end of, I can't remember all the timelines, but in any case, we had received this regulatory qualification for our work, which really said that, the things we were developing for clinical trials were appropriate to use even in big phase 3 clinical trials and across different disease areas. And we were the first, and I think are still the only company that has a real regulatory qualification for an AI-based drug development tool. So we had this external milestone that we were raising capital around. We said, like, we've hit this milestone, it's going to unlock a whole like bunch of business, and that's why we're raising capital. I think that's really, really important. That's like a general thing that everyone, if you're raising capital because you're like, we're running out of money, that's not a very good way to go. You're not in a position of strength. You want to be going out and saying like, yeah, we have money, we have cash bank, but we've just hit this big inflection point, and that's why we're raising additional capital. The other thing, right, was that it was kind of the tail end of the 2021 insanity in venture markets. The biotech markets had at that point already totally crashed. I mean, they were gone, and biotech venture was pretty much gone. Tech venture was still around. Again, it was kind of going on the tail end of kind of the, I think, kind of winding down that cycle. But then the AI cycle was also kind of starting at the beginning. So I think it was kind of at those three things kind of together made that go quickly.
In contrast, what was the longest or most difficult race?
The seed, our seed race was the most difficult race.
Was that, do you think you had an external milestone there, or what was it that made that difficult?
We were pitching something that I think is ambitious, and we didn't have a lot of the, like, it's not like, it wasn't like, hey, we're gonna sell this CRM SaaS. Like a lot of venture capitalists are used to looking at those types of things. At the time, I remember if anyone asked me like, what are some stupid SaaS metric is, what's our, I mean, like, this is over and the Zoom, because like that's just not that's like not what we were doing. What we were pitching at the time also to be like wasn't even a real, like, wouldn't have worked. What we were pitching for the seed round was effectively single arm clinical trials. So the idea was that we would replace the control group with a simulated control group. And from a regulatory standpoint, that doesn't even work. Like that's not exactly true. Like you can do it for like earlier stage proof of concept clinical studies, but it doesn't work for big phase 3 clinical trials. It's a relatively small market. And it's difficult to get people interested in it. That's not true. People are really interested in it, but it's difficult. It's difficult to get them over the line, I guess. It wasn't really until later, after that seed round, that we figured out how we were going to be able to find a way to get this, to build a solution that would be regulatory acceptable. So yeah, the seed round was hard. So I remember that I tell people, every now and again I talk to other entrepreneurs or wannabe entrepreneurs, people who are interested in becoming entrepreneurs. Oftentimes they're really like young, so like these kids coming out of college, or they're in college and they just want to start a company. And I always tell them, like, that's a terrible reason. It's a terrible reason to want to start a company just because you want to start a company. Like, running companies really hard, and building companies is really, really hard. And you need some really deep seated, like, psychological trauma to make you go push through it to actually do the thing. So I remember, our first round of, like, when we incorporated the company, we raised like $650,000, and there were 4 co-founders, myself included, and then we hired 1 employee, so we had 5 people. And we raised our seed round 18 months later. Okay, so if you take $650,000 divided by 5, you might realize that we didn't have a huge amount of money. That was like, we didn't, that was, so we had to actually make money, right? So we had to sign up these contracts. And I remember there was a point where Graham and I, one of my co-founders, we had run the numbers, and we realized that we were going to run out of cash before we were going to get this invoice from one of our customers. And so called a board meeting, because it's just the just the founders of the company, right? And we just cut our salaries, and down to the point where we had $9,000 in our bank account the day we got a check in from our customer, which was like $300,000 check or something like that. Like, it made a really big difference for our small company. And then we were able to go on after that and raise the seed round. But like, we were really close to zero in those early days.
I remember the pre-seed pitch is very general, but the seed pitch, as you mentioned, I was very audacious in terms of eliminating control arms, having them be fully synthetic. And I guess it's what you're saying is, like, it's great for like top of funnel because you get people's attention. It's a really unique idea. It's a really powerful idea if it's possible, in terms of the time and money saved, in terms of patients getting into the actual therapeutic arm. Did you have folks who were not SaaS investors, who were otherwise investors in this kind of realm, but were just too skeptical? Like, they didn't want to take the risk, they didn't believe it was possible?
Oh yeah, probably. Yeah. that was a long, it took us a long time to raise that capital. And I think that the pitch was pretty audacious. I also think like, we didn't really know what we were doing. Like as first time founders, raising our first like real venture round because the previous round was a convertible note, right? And so like raising our first real round, there was a ton of skepticism from probably everybody. I think skepticism about the direction we were taking, and skepticism about us as founders and whether or not we knew what we were doing. We didn't. I think the venture capital is it's a strange kind of industry, you know, because I think the initial kind of concept of it was going to be that you had people that were funding these types of kind of really risky business ideas. And they're either grand slams or they're zeros, right? Like there's strikeout, you hit a grand slam, but you're going for a really risky business idea. Somewhere along the way that changed, and a whole bunch of mutual fund managers got into doing venture capital, and it's very different, right? So I think that it's important, is one of probably the most important thing. If I had two kind of pieces of advice around raising money, step one would be raised around some sort of external milestones, right? Our seed round, we published a paper in one of the Nature journals about the research we were doing, right? So we had some sort of external validation that at least our technology was real. And then the second piece of advice is to build relationships with the investors who you think are good fits for your company. Like, so you have to go out there and you have to just meet with investors all the time, meet with investors all the time, and then pick out the ones who you like and then build relationships with them over the long term. Because there's a lot of people who I don't think should be venture investors that are. They should be mutual fund managers, I think.
I think there's a lot of validity to that. I think it's been probably 20 plus years, and that's been a phenomenon of investors wanting to see traction, wanting to see product market fit, wanting to see a million plus in revenue or whatever the milestone is.
Yeah, it's because they're SaaS investors and they're looking for somebody building a to-do note-taking app. Oh, I see. I got your new note-taking app, changing the world with taking notes. Like get out of here. You don't call yourself a venture capitalist. I'm sorry, just don't even call yourself a venture capitalist. Like you're not investing in startups. Yeah, I don't know what you're doing. You're a mutual fund manager. That's fine. But like the world doesn't need another note-taking app. The world needs what we need are world-changing, ambitious business ideas. We need people who are going after deep new technologies that will fundamentally change the way that like the world works. Where's the new internet? Like that's what we need. We need that kind of stuff. We don't need another note-taking app. We don't need it.
I couldn't agree more. I couldn't agree more. We got a lot more to cover though. I want to talk about relationship building. You're talking about, the advice of building relationships with investors. I imagine that's also true for you with customers, given that this is something that's out on the edge for them of trying something new. These are sizable contracts. How do you think about, sourcing those folks in the first place, figuring out if there's a fit there, building that relationship over time before you even transact?
For us, almost all of our relationships with customers have been developed, at least initially, at conferences. So we go to scientific conferences for the most part. So this might be like CTAD, clinical trials on Alzheimer's disease. So we might go to that conference, or AAIC, which is like the Alzheimer's Association's conference. So we go to different conferences and we present about, the technology and the things that we're working, and we meet customers and we talk to them. For our particular area, that's like our number one channel. And I don't even think it's close. I think it's like, to a degree, the only useful channel. We get some inbound maybe from like, like if we do a webinar or something like that, people may see it and they may email us afterwards, but that's, I think, pretty small. Almost all of it is conferences. I think that it's like in your regular job, your kind of daily life, you're kind of not open to salespeople, right? I get so many stupid emails a day from salespeople at various SaaS companies. I don't open them. I click down the side and then I delete. That's what it's like. That's what I don't want your SaaS, And so that's not going to be different for our customers. If somebody's working at whatever, some big pharmaceutical company, and they're a medical doctor working on some clinical trials and it's like a Tuesday and they get an email from us. It's not the right time. They're not in the right mindset to even be open to having that conversation, right? But they're now you switch it and they say, okay, well, they've traveled now to Boston for some sort of conference that's specifically focused on this thing. Like that's now they're in that partnering kind of mindset. They're open like that. That's always been for us the right place to meet people. So conference, I imagine that's super different depending on what kind of company you're building. But for companies in kind of like the pharmaceutical space, like conferences are without question the number one place. And the number one challenge about conferences is that there's a bajillion companies, okay? All of them have some stupid booth. It's blue. Okay. Everyone has a blue booth. It's all looks exactly the same. And every company has a completely different product or service, but they all do the same thing. Okay, so if their messaging is identical, so you got a bunch of companies with blue booths that all have some identical message on there, and no one is doing even remotely the same thing. So it's very difficult to stand out. Figuring out ways that you can go to conferences but still stand out and actually get noticed is difficult.
I imagine it wasn't difficult for you guys to stand out with the initial offering. The idea of not having a control arm or reducing the size of your control arm is pretty compelling.
Well, that's a compelling thing, but it's still difficult to stand out actually at a conference. It is difficult because you can't just put out a booth that's like, get rid of control group. Like that's, so you put out these booths that say things like accelerate your clinical trials. Well, everyone's accelerating your clinical trial. Everyone says they're accelerating your clinical trial, right? So it's like, okay, well, like how do you actually and like how do you even get people to come to your booth and talk to you in the first place? Standing out in the early days I think was difficult actually, and the really early customers we got from really scientific conferences, like people showing up and us having like a scientific poster and somebody like coming by and seeing our scientific poster. So that's yeah, it's difficult. Yeah, it was even for us with a really unique offering and a really unique company, like a deep artificial intelligence research organization. It was very difficult for us to stand out in the early days. I think even still now, like because now everyone says they're an AI company because they have a Chat GPT subscription. Like it's like it's. I think one of the things that we've seen, and for example, like we came out with digital twins, and now everyone's coming out with digital twins. We came out as AI, and now everyone's coming out with AI, right? People just copy the marketing, but they don't copy the technology. They don't, they can't, right? But they can but marketing is easy to copy. So I think that figuring out ways to kind of be it, sometimes it's almost like you have to be in there for the long term and build this long term trust and get known as the real deal technology based companies. I think that's a good strategy. It's difficult though because it takes a long time. It takes years.
Would you say more of your customers are skeptical, but they're intrigued, and then over time they become converts? Or would you say they more fit the paradigm of, they want it so badly, they hope it's true, and then they're, happy to find out that it is true? Like, or is it a third type of journey for them?
Yeah, no, it's definitely the case that people start off skeptical. Yeah, even today, people are still skeptical. We can show them things that the EMA and the FDA have written, and they're like, "Huh, they wrote this," and we're like, "Yeah, yes, it's on their website. Like, go download it." Like, so yeah, people are still skeptical even today. But I think largely that type of attitude is turning. This is really the future of what we built is the future of clinical trials. I think there's no question that if you go out, you zoom, 10 years into the future, and every clinical trial is basically being run this way. I think that I don't think that there's a question about that.
I think it's almost to your advantage, right? It's like a good moment in time where customers are skeptical but intrigued. They're kicking the tires. They want it to be true, but they don't believe it could be true, because that means that the market's still not mature, right? It's still not saturated. By the time they are moving quickly through your process, through your funnel, maybe there's someone else who's also found some market share, been able to offer something competitive.
Yeah, maybe. I think competition is stupid. It's for only losers care about competition.
Because you sound like Peter Thiel 0 to 1 right now.
Well, no, it's not like Peter Thiel's always like build a monopoly or whatever. And I'm just saying that like don't worry if you're worried about competitors, you're a loser.
Got it. Got it. Got it.
Okay. So like just build great products, build amazing technology, and then put it out there. And if there's some other company that is trying to get into, like, especially in these areas, like where we're not building, again, we're not building note-taking apps here. We're building really fundamentally hard, differentiated technologies, and we're doing it for a problem that's incredibly important. I mean, speeding up medical research. I'm all for it. If there's anyone out there that's got cool technology, okay, that they think can speed up medical research, you should come talk to me and I'll help you. I will
Mhm.
help you bring your new technology that speeds up medical research to the market, because the problem isn't other startups. The problem is the stupid status quo that says, like, we're going to be incredibly risk averse and never try anything new and run this clinical trial for 5 years. And like, I just saw this. It was like a tweet maybe a month or a couple months ago from some professor who had been working on GLP-1 based drugs like 25 years ago or something like this for obesity. Like 25 years ago, something like that. And he couldn't get anybody to buy into it. Right. And now these drugs are having tremendous impact on like a gajillion different indications. Right. The problem is the industry. The problem isn't not having enough. The problem isn't having too many tech startups coming into the industry. The problem is that the industry is incredibly backward and slow and technophobic and terrible. Okay. And as many startups that want to get into this industry to help out, I love it. More tech startups into the biotech and pharmaceutical industry, please. I would love to help you. So I'm not worried about competition. I'm worried about overthrowing the status quo and creating a new technology based medical industry.
You're gonna have a lot of people messaging you after this, hopefully.
I don't care.
um, I want to talk about process a little, and this is a question with regard to investors as much as it is with customers. You know, when you're offering something novel to customers, they may not have a process to follow for acquisition. Maybe you have to help structure one. With investors, obviously, they all say they have a process. Some of them do, some of them don't. But I've found a lot of great founders, especially when it comes to a strong financing, are the ones who dictate the process versus following the process that investors set out. How do you think about that in terms of being the one to author or dictate the process versus following process for your customers, for investors?
Customers is you have to follow their processes. This is just is what it is. And I mean, in our case, like I hired Andrew, a friend of mine, to run our business development, and so he helps us navigate those processes. But you have to. When it comes to investors, like I forget investor process. I never, I personally am not a process driven person. I'm incredibly disorganized. I've never followed a process in my life. So if you're some investor, you want to invest in Unlearn, you're like, there's going to be no process. I will get around to it. I respond to people's emails like 6, 8 months after they sent me an email. I'll just respond and be like, hey, I saw your email. Yeah, let's have a coffee or something. Like, there's no process on this side. It's like, my view on things is that the entrepreneurs, first of all, the entrepreneurs are in charge. That's just that I fundamentally believe that the entrepreneur dictates every aspect of everything. If you're a great entrepreneur, that's just how it is. You are the pilot of the rocket ship. You are the pilot of the rocket ship. And these people, they got to decide whether they want to get on that rocket ship and go to the moon with you or not. But you're going. I think that has to be your attitude. Certainly my attitude is like, I am the pilot of this rocket ship and I'm going to the moon. I'm going to Mars. I'm going. Get on or don't. I don't care. That's sort of up to you. And I really don't believe a lot in process, with the one exception being, I actually think that, so I go pretty extreme on this thing. Like I don't use an investor deck, for example, until the very end. I'm meeting with people. I don't show slides. I don't show a deck. I don't do a pitch. Almost the entire aspect for me of fundraising is that we're going to go out for a coffee. We're going to go out for a beer. We're going to chat. We're going to do that quarterly, something like that. And then, like, when it comes time for me to raise capital in 1 or 2 years in the future, you know me, you know the company, you know what we're trying to build. You've seen also probably I also think it's important. So many entrepreneurs always tell they're always trying to tell this rosy picture. I hate listening to these other entrepreneurs talk about how great everything is going for them. I know behind the scenes it's a dumpster fire. Okay. So that's, don't lie. That's be authentic. Tell people the problems you're having. Let them watch you solve them, right? You show up and you say, hey, Q1, I'm having this problem right now. Whatever, you come back Q2, you're like, hey, here's what I did. I solved that problem. Q3, hey, like we got this new stuff. That's what people want to see, you work through that stuff. They get to kind of see you be an entrepreneur. They get to see you run your company over time. And that's going to build confidence in you that you're an authentic person who's going to tell them the truth, who's going to be a good business partner. Because that's really what you're doing. You're not just trying to get a check in the bank. You're looking to bring on a person who's going to be a business partner with you for 5 to 10 years, right? And so that's how people, I think, they should think about fundraising. And the other aspect, a lot of people, I think, get really wrapped up in their companies, right? And they're like, my company needs to be successful or whatever, all these things. Just build what you think is great. That's what I think. I think people should just build what they think is great. And if people don't see it, then that is what it is. Like you just do your best. uh, so I don't know. I think that going out there and trying to raise capital in order to, for your note taking app, it's like, I don't know how I don't know if I could help somebody do that, to be honest with you. I think that you just have to go out there with a story that you truly believe is world changing and pitch it to people. And you have to believe it, and you just have to be honest about it. Yeah, you can't go out there with your new note taking app changing the world.
I think that's more true today than ever has been. I think there have been different moments in time where the markets are very active, people are in a different mindset, and you can play this FOMO game and create scarcity and urgency, and that works, and people will write checks and founders will raise money. But I think in a lot of other market times, right, or in segments where that's not the case, authenticity is really important, right? And having an audacious vision is important. You still, of course, need to have what you said, right? That conviction of I'm going with it without you. It's your choice whether or not you want to be on board. Speaking with that kind of conviction and moving with that kind of conviction, I think does make a huge difference, regardless of the kind of market that we're in, and that's what you need to do. I think there's a difference in terms of what you're saying around the value of building that relationship, of letting people see under the hood, see some of the problems, and like you said, see them or have them see you solve the problem is so powerful.
Yeah, I think my attitude is summed up by the Elon Musk quote: optimism, pessimism, fuck that. We're gonna make it happen, right? I think that's what that's the way, if you're really trying to be like a deep tech entrepreneur, that should be your attitude. And I think that's the attitude that you need to bring to when you go to raise capital. That's what people want to invest in, that attitude. They don't want to invest in some salesman who's trying to tell them a rosy story about how their note taking app is going to change the world. They want to invest in people who are really building big, ambitious visions. One of the things actually also that when it comes to this idea of pitching venture capitalists and needing a big, ambitious vision, is I think that entrepreneurs don't understand how big of an exit they need to have for their venture investors to be happy. Okay. They're like, hey, if I built this company and sold it for $100 million, that would be great, right? And their investors like, no, that would be terrible. I I think that most entrepreneurs don't understand. They don't understand the math that they're trying to return the fund off of their whole fund off of their investment in your company, right? So if they got $100 million fund, they're looking for you to be a multi-billion-dollar company to be able to make sure that they get their returns. Their fund returns, not their return off just your company. They need to be able to have a fund that returns enough capital to their investors, right? That's their business. I think people don't understand it. I think that first time entrepreneurs often come out of the, talking about building $100 million companies. And it turns out that no one wants $100 million company. They want $100 billion company. And, so this was the case for me for sure. I was thinking I'm going to build a $1 billion company. And it's like, well, why stop? Why stop with a vision that gets you to $1 billion? Think about how you could build $100 billion or $1 trillion company. That's the kind of ambition that I think is infectious, not only to investors but to employees. You want to attract the best talent to your company, have a really big, bold vision. That's what people want to take part in.
Yeah, I think that's also very true. It's a hard lesson to internalize. I also think part of that is like due to investors just not being great at their job, right? The power law makes up for a lot of mistakes, and if we were much more consistent, we wouldn't need massive outcomes. I
But
think
then
there's
you'd be a mutual fund manager, investing in mutual funds. Like, that's, I actually think that it's fundamentally the case that if you want to build, if you want, I think the power law is a law of nature, I guess is what I would say.
I think it is, but I think that you can also still build funds that don't have to have. I mean, I've seen right, amazing funds return without $100 billion outcomes or even like $10 billion outcomes, and a lot of it's still driven through power law dynamics. They just had like a company that was capital efficient, that didn't have a ton of dilution, and was able to return them 100x or 200x by becoming a 2.5 or a $4 billion company, something like that, which is still a massive outcome, right? Still way bigger than that $100 million acquisition, but it's not the rarefied air of the $100 billion outcome.
Yeah, but think about how much more money all those people would have made if they'd have had $100 billion outcome. Would have made even more money.
That is
Yeah,
true. That is true.
to be clear, like from the entrepreneurial side, from the entrepreneur side, I don't think you should be doing it for money. I really don't. I think the entrepreneur should be in it to change the world. I think if you're doing it for money, you're going to give up. There's easier ways to make money, like go work at a hedge fund or something. There's easier ways to make money than starting a company. So you should be in it to change the world. But the investors are in it to make money. Like no, no one should have an illusion otherwise, I think. Yeah.
I'm in it to change the world, Charles. I don't know what you're talking about. I have a question for you. It's kind of a experiential one, but a philosophical one as well, about fundraising. When you look back on all the raises that you've done, now you've raised 5 different rounds, I believe. If you look at it, do you think in those each of those rounds you were out there looking for a yes or a no that already existed, or were you creating a yes or a no? Were you persuading people, or were you just finding the people who were ready to say yes to you and to what you were doing?
No, you're definitely persuading people. I think that what you're persuading people about is that's an interesting question. I think that for the most part, you're persuading people about yourself, not actually anything about your company at all. People can, they can figure out the question of like, is the market big enough? They don't need your help. They got a spreadsheet. They got analysts. They don't need you to help them figure out if the market is big enough. They're evaluating you and whether or not you as a founder have the grit and the tenacity and the relentlessness to go out there and build this company 0 to 1. That's what they're evaluating. And you have to persuade them of that.
I think that's really well said. I think there's a lot of value in building those relationships for that purpose, right? People seeing you do the things you say you're going to do and solve the problems that you inform them of existing. It creates that trust. It creates that confidence in your ability. What's been the hardest moment in this whole journey for you?
Every day. I mean, I don't honestly like every day without question. Like being a CEO. Yeah, I made a million mistakes too along the way, like a million. First time founder, you just make mistake after mistake. I gave this kind of like history lesson of some aspect of our company to somebody the other day, and she was like, "Wow, you made all you made all the mistakes. You made every textbook mistake." And I think that like that's not wrong. Like there's a huge amount of kind of like I say I've got like 8 years of scar tissue that kind of like built up wisdom about how to be an entrepreneur and how to found companies effectively, which I did not have at the beginning. And there's basically no resources that you can find that teach it to you. For me, the hardest part has been hiring. Hiring has been the most difficult thing where I've made a ton of mistakes in how to hire people. Like it's taken me a really, really long time to come up with a process. Like I said, I'm not a very process oriented person, and like it's taken me a really long time to come up with some lightweight process that I believe leads me to hiring good people. And so the problem is like if you don't know, if you're an entrepreneur and you don't know how to hire great people, and by the way, great people is relative to you. Somebody who's great at company A may be terrible for your company. It's not them being good or bad. It's whether or not they're a good fit for you and your company and your leadership style and the rest of your team and all of these other things. And how do you figure out if someone is that good fit is hard. And if you hire a person who's the wrong fit, how do you fix it is simple, but hard, right? And I think that those lessons, coming from a scientific back technical founder, you starting this company, I think that is really like everyone makes the same mistakes, and it's all around figuring out how to build a team around you that is the right fit for you and your company and your style. Is very, very difficult to do, and it leads to a lot of pain. I would say actually. So like the hardest part has been dealing with that, building the team.
If you could go back 70 years into the past and give yourself a couple of pointers on hiring, what would they be?
The first thing is that I would spend more time up front with me and with my co-founders figuring out what we were even looking for. Okay, because I think we didn't even know at the time, like what type of company we were trying to build, what types of traits we were looking for in people, and that would be step one. Would be I would first of all like get all of that stuff before we hire anybody. I would first of all figure out what it is we're trying to achieve and what we're looking for. The second thing is throw the resume away. Don't even look at it. Okay, so right now, when I'm interviewing people at Unlearn to figure out if they're a good fit for the company, I literally don't get their resume. I don't get their full name. I ask for first name only. I don't even want to be tempted to look up their LinkedIn profile. I don't want to know anything about that person's experience, because what I found is that it's very easy to get blinded by certain, for me at least, by certain names, like names of where they went to school or what company they worked at before. And I'll be like, oh, this person had this amazing title at this company that I really respect. They must be amazing, right? But like, that doesn't mean they're just because they were a great fit for Palantir doesn't mean they're a great fit for Unlearn. I have to put that aside and focus on whether or not they really have the right attitude that I need for my company. And yeah, that took a really, really long time. And I've made so many times hires, by the way, that have worked out well and that have worked out poorly. So both. Sometimes you get lucky, but where the process was, holy shit, this person worked at that company, I have to hire them, which is a terrible reason to hire somebody. So I think that, like, to me, yeah, figure out what you're looking for, like throw the resume away. And then the third thing is hire for attitude. Don't hire for knowledge. You can learn new skills. A person, especially if they have the right attitude, they can learn new skills. They can learn new knowledge. You can't learn a new attitude. You can't. Your attitude is what it is. So those three things were, I again, like it honestly took me a really long time to learn those lessons, like 7 full years making the same mistake over and over and over again before I eventually sat down and wrote down my thoughts and was like, maybe there's a better way to do this.
Yeah. You had to unlearn some biases you had.
Yeah. Well, yeah, I guess but I haven't unlearned them. It's the problem. Like I actually still have those same biases. Like I went to the University of Michigan for undergrad, right? And if some resume comes across my desk with University of Michigan, and I'm like, oh, bring them in. You know, it's like the biases are still there. It's more that I need to figure out how to trick myself in the interview process to prevent them from playing a role.
I think that's really, really knowledgeable, and it's a hard thing to do, and something that when you're looking at a small team trying to grow quickly, you're looking for heuristics, and it's hard to trust your own intuition outside of those, right? And
Yeah.
actually
Also, don't try to grow quickly in headcount.
Yeah.
Grow quickly in revenue, grow slowly in headcount. Okay. I think that's another thing. I've never seen any company grow quickly in headcount and be glad they did it. It's one, you end up hiring people you don't need or the wrong people. I think that this is another thing. I super down on managers. I don't believe in managers. I think that managers are people. There's a paper I just saw, academic paper that looked at personality traits and what makes somebody a good manager. You know what the number one predictor of a person being a bad manager is? to wanting to be a manager. Okay. That's totally true. The people who say they want to be managers make terrible managers. So like, I think that hiring managers is another really, I just think that small startups shouldn't do it. I don't think you should have a single manager in your company until you're at least 50 people. You should have, if you're the founder, you should have 50 direct reports at your company. Boom, all up to you. Forget managers. Throw that shit out. And so like the problem is you hire these managers. First thing manager wants to do is hire a bunch of people under them. First thing they want to do is I want to hire all these people. And so if you do have managers, you should never hire anybody until a team is completely, totally underwater. When they are totally drowning underwater with work, then you can bring somebody else on. But hiring too many people, like most of the time, I think that managers want to hire a lot of people instead of prioritizing, because prioritizing involves making difficult decisions about what you're going to not do. And instead of making those difficult decisions, they say, just give me 3 more people and then we'll do all of this low priority stuff. But now you've got a whole bunch of people that you hire to do low priority stuff. That's not good for your business. So I think you should keep headcount really small, delete all your managers, don't have managers, and go full founder mode. This is the only way to run companies, to run startups for sure. I think that anyone who wants to be a manager, no good. No managers. Managers are bad.
I can't. I don't know if I can endorse 50 direct reports
50 direct reports.
outside of you and yeah,
Jensen's
you
got
and
like
Jensen.
150 direct reports or something like this. And don't have one-on-ones. Those are stupid. Like I 100% subscribe to this view. But the biggest thing is like, so I'm going to say something controversial. But let me give this quote. This is Richard Feynman has this quote about. So this is Feynman. Get mad at Feynman if you the Feynman estate. But he has this quote about humanities, and he says the hypothetical value that having humanities classes brings to campus is offset by the number of dopes who take these classes. Something like that. So that's Richard Feynman. I apply that to the people who want to be managers. Okay. The issue is that the hypothetical value of having managers in your company is offset by the dopiness of the people who want to be managers for the most part. And so like I think that like yeah, that hiring like you want to be a manager, reevaluate your life goals, in my opinion. Reevaluate your life goals.
I want to finish out with a lightning round. These are going to be like very quick answer, short answer questions. There's a bit of a mixed bag. We got 4 for you.
Okay.
So the first is, if you could only eat one food for the rest of your life, what would it be?
One food?
Yeah, one food for the rest of your life.
Trying to think of I guess Soylent. Like I'm trying to think of a food that has all of the nutritional value that I would need.
I'm
I
not
guess you
surprised
only eat
you made
one
it
food, you're going to
practical.
have a nutritional deficiency.
Yeah, that's not the way anyone else so far has interpreted the question, but it is a valid interpretation.
Yeah.
Soylent
Soylent.
it is.
Yeah.
Um,
And sure, something like that.
who are you voting for?
Not going there. This year, the last couple of elections and stuff, I got like pretty wrapped up in like paying attention to. I'm not. If you anyone who's like talking politics on my timeline right now is getting muted. I'm super over it. So I'm trying to stay out of politics this cycle.
We'll accept it as an answer. What's been the best moment of your career so far?
Of my whole career,
Yeah,
it's a long. Like, what does that mean? The best moment of Unlearn, the best moment of you know. I
interpret
think
it as
that.
you will.
Mm, I think that the best moment of my career probably is as an undergraduate. I published my first scientific paper. If I had to think back to the thing that like really probably like, I think that's probably the best moment. And it kind of seems a little bit like, I don't know, it's hard because like, you're like, oh, everything's downhill from there apparently. But but I think that like, yeah, probably like, I don't know. That's the first thing that really started moving me in this direction. I guess that my first scientific paper would be the thing that maybe my best moment.
Was that a moment that gave you confidence or self-esteem to say, I can do things other people haven't done, I can push the world forward?
Well, yeah, I didn't go to college with any idea that I wanted to be a scientist. Yeah, I'm one of these people who went to college being like, I don't know what I want to do. My entire first year, I took like classics. Now, great, I had to. I had to take classics. I was in the honors program or whatever, and we had this whole set curriculum. But I didn't take any science courses, I think, my first year of college. I think I just took classics and various other things like that. And so it wasn't really, I was never interested in like book learning science. And so even like towards the end of college and then through graduate school and all that kind of stuff, I always viewed that if I got an A in a class, I worked too hard at it. A meant I spent too much time. I should have taken that time and put it into research. Like what has made me interested in being a scientist is nothing about what's in the textbooks. It is doing research and finding out, discovering things that go in the next version of the textbooks. That's the part that I find fun and interesting and exciting, not the textbook stuff. So I think that it was, like I said, my first actual getting into a research lab and doing a research project and publishing a paper. And I think that to me was like that was the highlight because that's the thing that I fell in love with. I didn't fall in love with the books. I fell in love with the process of discovering new things.
That's a great answer. I love it. Last question for you here. Who's helped you the most in your career?
I think my advisors. So I had three kind of academic advisors: Hashim at Michigan, and then Colin at MIT, and then Punkage at Boston University. I think that those three people helped me the most in my career. I don't even, to be honest with you, I don't think that it's particularly close. I think that those three people are still advisors. Like that, like I still have, Punkage came out earlier this year to San Francisco, went for a long walk around the city and talk about all kinds of stuff. And that type of those people have been, but without question, I think the most helpful to me in my career.
Yeah, well, we'll leave it there. That's great. Thanks, Charles.
Thanks, Neil.
Thanks again for tuning in to this episode of Money Moves. If you learned something new or just loved this episode, click below to subscribe. See you next week.